Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will take a look at the Japanese yen because right now the Japanese yen is the brightest currency that brings really nicely looking setup as on the high time frame charts, as on the intraday charts, and in fact it has generated a lot of setup for trading in the recent week. But this is not the only reason why the Japanese yen is really interesting, but because also of fundamental issues, fiscal issues. So, as you know, this will be the Bank of Japan meeting on the next week. And currently, if you carefully will take a look at the fundamental picture, and in the CFTC recent report, you will see that the speculative position on the Japanese yen stands at the all-time high. It means that no traders exist, no investors who could keep the current trend on the Japanese yen, because nobody will buy since those who could buy is already bought. And usually when the speculative position reaches the highest levels, the extreme points, market has the tendency to turn in opposite direction. So this possible turn will not mean that this is the end of the long-term bull trend on the Japanese yen. This could mean just some pullback, but this pullback at the same time will be moderate. It will not be some kind of the short-term bounce, just minor retracement. No, this probably will be some meaningful retracement. And since we have the reason for that from a technical point of view on the weekly chart, on the monthly chart, this probably will be really significant bounce. At least for us, for daily traders who trade on the daily chart. That's why we should be ready for upward continuation in a medium-term perspective from the Japanese yen. Another reason stands in a bit more sophisticated sphere. This is stands in relation to the current Bank of Japan policy. So we have brought the new Phantom Consulting report concerning the Bank of Japan policy, and mostly they tell that the activity of the Bank of Japan that has a tendency to the stronger negative rates will not bring any results to the Japanese economy. So they thought that one of the possible solutions for the Japanese economy could be the redistributing of the corporate's cash to the individual sector to trigger the consumption. Because right now the largest corporations in Japan have very significant cash assets, some kind of deposits, and instance in very significant part of the gross domestic product. And this in fact the money that just do not involved in the business process. And if somehow let the Bank of Japan to distribute these assets among the population, that could really trigger the consumption and the inflation that Bank of Japan would like to get. But unfortunately, Bank of Japan absolutely doesn't tell about this. That's why investors previously already has shown that they do not quite believe in the efforts of the Bank of Japan to make the yen weaker. That's already has happened. So the first reaction on the announcement of the negative rates by the Bank of Japan was positive, but it was erased very fast, and yen is continuing dropping. That's why if in the next week Bank of Japan will announce another rate drop for some points, and hardly this will have a significant impact. It means that current upward action is mostly the technical due to the some situation, but in the further perspective, in long-term perspective, the bearish trend is still valid. I mean, on the chart in United States dollar Japanese yen is bullish for the Japanese yen directly. So bullish trend on the Japanese yen is still valid, and it probably will continue after retracement will finish. So what we will be watching for next week? From a technical point of view, on the daily chart, we see that market stands at overbought and at the fib level. 112.10 area is the fib resistance. So in fact, market has completed our minimum target for retracement. Recall our discussion of the thrust downs. Maybe we said we could get some kind of the double repo pattern or something of that sort. So that was not perfect double repo, but the market behavior was corresponding to the double repo pattern, and let's call it as the double repo lookalike. But now it's not very important because market already has hit the target. Simultaneously, here from the Judd Napoli point of view, we have the bearish directional pattern that calls stretch, because market has reached the daily overbought right at the fib level. It means that in the beginning of the week, market could turn to some retracement. So if you're a scalp trader, you would like to take the short position on the intraday charts. If you trade, for example, on the 15-minute chart, on the 30-minute chart, you could try to search here for the sell signals and trying to take the short position. For other traders who trade on the daily time frame chart, we are mostly searching the chance for taking the long position. That's why we will use this pattern as the background for a possible retracement, and we'll try to use this retracement to buy the dip, so to take the position on the better levels. That's major trading plan for daily chart. On the 4-hour time frame chart, guys, we see that the area around weekly pivot point is also the confluence support. 110.20 area is confluence on weekly pivot point. That probably will be the suitable area where we could think about taking the long position. Also, those who will trade stretch pattern on the short side could think about this level as the potential target destination of this trade. Also, guys, we're calling to you to read our weekly research, because there are some interesting analysis for the weekly chart, and it also has the pattern that we will trade, because we are not just occasionally will take the long position. This trade mostly is based on the weekly setup, where you will find the probable possible destination point for that trade and why we're in general trying to take the long position there. So this setup mostly stands in relation to the weekly chart. That will be our trading plan for the coming week. So mostly we're expecting for retracement down, trying to take the long position, because we think that currently there are a lot of factors that will support further upward action on this chart on the Japanese yen in the nearest perspective. But in general, guys, in the longer term, we treat this upward action only as a retracement, because long-term bearish trend is still valid here. I'm talking in relation to the chart, not just to the Japanese yen directly. So and we think that after this retracement will finish, this bearish trend probably will continue.